Trading in the Indian stock market is like catching a train. You need to be at the right place at the right time. Understanding market timings is crucial for any trader, big or small. It dictates when you can buy or sell stocks. Knowing the schedule helps you plan your trades effectively. This ensures you don't miss out on opportunities. Think of it like this. You wouldn't show up to a shop after it's closed, right? The same principle applies to the stock market. Whether you're a seasoned investor or just starting, knowing the Indian market's rhythm is the first step to success. Knowing when the market opens and closes helps you manage your trades. It also allows you to react to news and events that affect stock prices. This awareness helps you make informed decisions and potentially maximize your returns. In simple terms, understanding market timing is like having a map to navigate the stock market effectively. India boasts two major stock exchanges, the Bombay Stock Exchange, or BSE, and the National Stock Exchange, or NSE. Both play a pivotal role in the Indian economy. The BSE, established in 1875, is one of the oldest stock exchanges in Asia. The NSE, set up in 1992, is known for its modern trading platform and technology. Both exchanges list a wide range of companies, from large cap to small cap. You can trade stocks, derivatives, and other financial instruments on these platforms. While both exchanges have similar trading hours, their indices differ. The BSE's benchmark index is the Sensex, while the NSE's is the Nifty 50. Understanding the nuances of each exchange can be beneficial for traders. The trading day in the Indian stock market is divided into three main sessions: pre-open, regular trading, and post-closing. Each session serves a specific purpose. Familiarizing yourself with these sessions is vital for successful trading. The pre-open session, from 9 a.m. to 9:15 a.m., is like a warm-up. It allows investors to place orders at a fixed price before the market opens. This session helps in price discovery and reduces volatility when the market opens. From 9:15 a.m. to 3:30 p.m., the regular trading session is where the action happens. Investors can buy and sell stocks at prices determined by supply and demand. This is the most liquid time of the day. Finally, the post-closing session, from 3:45 p.m. to 4 p.m., is for calculating the closing price of stocks. Understanding these sessions helps you time your trades effectively. Section 4. Trading holidays, planning your breaks. Even the stock market takes a break. The BSE and NSE have a list of trading holidays each year. These holidays typically include major festivals and national holidays. It's essential to be aware of these holidays to avoid any surprises. The holiday list is published on the websites of both exchanges. You can also find it on financial websites and newspapers. Plan your trades accordingly, as no trading occurs on these holidays. Being aware of trading holidays helps you manage your portfolio effectively. You can adjust your trading strategies in advance, avoiding any potential losses or missed opportunities due to market closure. Section 5. Timing is everything. Tips for successful trading. Now that you understand the importance of market timings, here are some practical tips to maximize your trading efficiency. First, the early bird gets the worm. The first hour of trading often experiences high volatility. Use this time wisely to capitalize on price movements. Next, keep an eye on news and events that can impact stock prices. React quickly to capitalize on opportunities. Avoid the rush hour. The last hour of trading can also be volatile. Avoid placing large orders during this time. Always have an exit strategy in place. Know when to buy and sell to minimize losses. And finally, stay informed. Keep learning about market trends and strategies. Knowledge is power in the stock market. By following these tips and understanding market timings, you can gain a significant advantage in your trading journey. Section 6. Master the clock, master the market. In the world of stock trading, timing is everything. Understanding the Indian stock market timings is not just about knowing when to buy or sell. It's about gaining a competitive edge. By mastering the clock, you master the market. Remember, a successful trader is not someone who predicts the future, but someone who reacts to the present effectively. Knowing the market timings allows you to do just that. It empowers you to make informed decisions, manage risks, and potentially maximize your returns. So go ahead and conquer the Indian stock market, one tick at a time.